Hi, Pierre. Thank you very much for joining us today. How are things in Boston?
Hi, Jamie. Thanks for having me. It's actually great here. It was quite a lot of thunderstorms this morning, but now the sun's coming out, so it's a beautiful city. I'm quite new to it here, but I'm really warming up to my new hometown. So I'm a very new, happy Boston resident.
Boston's a great town. WMC Energy is not a producer and it's not exploring for uranium, but it is involved in the trading of uranium for its various clients. And before we get into the actual mechanics of trading uranium, why don't we just start with a brief overview of WMC Energy and its various services?
Sure, absolutely. We're a small Dutch commodity merchant. Started in 2016 with only 3 employees that founded the company, and we grew in 2019 with adding myself and another former colleague at Cameco with me, and then it's been basically snowballing from there. And we're currently at 17 employees, and the majority of those are in Amsterdam in our new head office there. And then we got a couple of people in Germany and in Sweden, and then it's 3 of us over here in the United States. And 4 of us are working on the nuclear fuel, which was the original business, and it's going very well, and we're very comfortable with that. And then some of them are working with financing, because a big portion of what we do involves financing of future supply. And then we have a large new group that's rapidly expanding, and that's where most of the excitement is in the company, is in battery materials. So we're looking to basically to replicate what we've been doing with nuclear fuel in battery metals such as cobalt, lithium, and yeah, we got some manganese and obviously nickel as well.
And what exactly do you do at WMC?
As part of the nuclear fuel team, I am covering some of our clients, trading clients, and because of my history with Cameco, when I was covering the European, Middle East, and African market, I also have some of my clients still over there, so the utilities and suppliers over in Europe. But the absolute majority of my time, they changed very rapidly in August last year when we started working with Sprott and their physical uranium trust, which now essentially is a full-time job for me and has certainly paved the way for the expansion of the uranium and nuclear fuels team here at WMC Energy.
So I'm glad you brought up Sprott because I want to use this as an example, but you're on the front lines and you're talking to suppliers, you're talking to utilities, and I want to get a better sense of your day-to-day operations as a uranium trader. Can you just take us through this? How active are you? Are miners or producers phoning you up on a regular basis saying, hey, I got 500,000 pounds for sale, I got 1,000,000 pounds for sale? Are you taking numerous calls from utilities looking for supply? Just take us through your day.
Yeah, sure, absolutely. And it certainly changed. I would say maybe in August, September, it was more like the former, what you said, when people are calling us up and wanting us to buy uranium. Now it's sort of starting to shift to us chasing them and actually finding uranium, because we are noticing that it's getting a little harder to find. There certainly has a lot of things that have been happening, good and bad, since August last year, with obviously Sprott taking up a lot of the spot supply. But on the negative side of things, from a humanitarian perspective, of course, the developments in Ukraine, but that certainly has had an impact on the security of supplies situation in the uranium market as well. But personally, for my day, maybe start trying to catch some of our friends and colleagues over in Kazakhstan before their day is over, even though they do have a lot of late nights. But anyway, check in with them, and then roll over to Europe a little later in the morning to catch them before they go home, just to see what's going on over there. And then once the market's open here, we obviously have a call with our friends at Sprott to make sure that we're ready for the day and know what's going to happen there, and keep an eye on the equity markets and try to figure out if it's going to be a busy day there or not. And then it's starting to start with emails and meetings in general, and has been a lot more and more of talking to investors and educating investors on the nuclear field in general, but even also the uranium market, of course. And people are quite interested in learning more about it. So it's a very exciting time to be in this field.
And I want to get a sense of the difference between dealing with a financial player like Sprott versus a utility like Constellation Energy. And maybe you can just take us through that and just how their perspectives are totally different.
Oh, absolutely. Of course, very, very different, different players. Whereas Sprott is a fund that raises the money and then would buy near-term uranium for delivery within a few months, and have no plans to do anything with that uranium. It stays where it is. Whereas when you're a big utility, such as Constellation or an EDF or a Vattenfall, what they do, they buy uranium to burn in the reactors, and that process, you don't look for delivery in a few months. You can have deliveries starting a few years out in time, and even if you are getting delivery of uranium in the coming months under a longer term contract, that uranium is probably not going to be used for another few years anyway, because it needs to go through a few steps of the fuel cycle chain to be transformed into a nuclear fuel element. So it's a much of a longer process, and there's very few utilities that are actually active in the spot market. Most of them are doing bilateral longer term contracts with established suppliers of uranium, such as Cameco or Kazatomprom or Orano, BHP, the more primary supply players. But what we did see over the bear market time, if you will, in uranium, when you had a huge surplus of spot material, then there was room for financing entities or intermediaries such as ourselves, where we would essentially source very affordable uranium in the spot. We'd find a financing entity would financing it for us, because then they would have a receivable towards a large utility, established utility out in time. And that was a very successful trade for us. But as we've noticed, the contango in the market disappears, that those opportunities are not there anymore.
So I want to take our discussion, I want to dive a little bit deeper into pricing and the various components of the nuclear fuel cycle. And it starts with mining, which is the buying and selling of uranium, and that's followed by conversion, then enrichment, then fuel fabrication, and that goes to the nuclear reactor, and finally we get electricity. So why don't we just start with the spot market? That's where you spend a lot of your time. The price has been hovering around $50 a pound in spite of all the positive factors. So maybe you can just give us a sense of what's happening in the spot market. Why aren't we seeing a higher price given all the positive catalysts on the horizon?
Yeah, I think it's kind of a little bit what I referred to before, that the utilities aren't necessarily active in the spot market, and the demand that was created in the spot market for onward sales to utilities is not there anymore, because the spot market has been pushed up, and now we're more in a flat market. There was backwardation for a bit, even though that might have disappeared, but at least it's a flat market. So that financing carry trade is not there anymore. So most utilities are active on a market further out in time. So then the largest spot buyer has, without a doubt, been Sprott, or Sprott's Physical Uranium Trust. It's over 50% of the demand since September last year, which is obviously a very large player. We wish there was more buyers in there, but it just a lot of people have been hesitant. Obviously, there are very big changes going on in the uranium market right now. People are just trying to wrap their heads around potential sanctions and overall demand. So definitely a lot of uncertainty, but still, I would say I'm a little bit surprised I'm not seeing more buyers in the spot market, because you look at the fundamental story, it's never been better. It's just pointing in one direction. There's definitely room for higher prices. There will need to be higher prices. But I think it's just a matter of timing, maybe, that the uncertainty scares away people, and that's why I don't see any positive aspects whatsoever with the Russian invasion in Ukraine. It's a horrible from a humanitarian aspect, but even the market itself, we had a very good story even without it. So the added uncertainty and demand, if you will, and stress on the system that this is causing with potential sanctions on Russian material, it's not only good, it's almost creating too much stress on the system, and it's causing some players to hold back, whereas it was not necessarily the case before.
And in a typical year, how many pounds would trade in the spot market?
I would say typically it's changed a lot. Say during the last run up in 2007, it was maybe 25 million pounds, and last year it was about 100. So the spot market has gone a lot bigger, and the primary driver for that is the investment community. And by saying that, it's not just the the funds such as Sprott and Yellowcake. There are also junior miners have been buying a bit of uranium as well. Early last year, I think it added up to about 50 million pounds. So it's a pretty significant portion that the investment community is buying.
So 100 million pounds traded in 2021. We're halfway through 2022. How many pounds have traded thus far?
That's a good question. I think we're not on track just yet to have a year as in 2021, but I would expect it to be probably around 30 million pounds, something like that, maybe more.
So that's a good overview of the spot market. Why don't we move on now to conversion and enrichment? And before we get into the pricing of those elements, why don't you first tell us what conversion is and what is enrichment?
Absolutely, and as I will explain, it actually ties together very well because they are interconnected. There are connections between these different components, and they may affect each other's prices. So U3O8 Yellowcake that everybody's familiar with is by far the most liquidly traded product. So Sprott has made the decision to only focus on U3O8 because that's where you have a daily price. It's the most liquidity, easiest to find product. The conversion services, or we call it UF6, because you basically convert the uranium oxide into a gas, uranium hexafluoride, and you do that in order to enable the process that's called enrichment as the next step. So the conversion is a very simple chemical process, or as simple as it gets. There's no nuclear energy or nuclear, so you're not changing the atoms in any way. You're changing the molecules, obviously, but it's a pure physical or chemical process. But it's a very necessary step. So it's a straightforward process. You have it in Canada, you have it done in Converdyn here in the US, and also in France with the Uranium facility. And clearly there's some capacity in Russia and China as well. But yeah, that's the straightforward process is you change it from a powder into a gas form. And once you have it in the gas, it's converted to UF6. Then you send it in cylinders, it's not drums anymore, to the enrichers. And that's obviously a much more, the process itself, maybe not complicated, but it's quite difficult to what you're trying to do, because you have the two isotopes on uranium you're focusing on is uranium 238, which is the majority of it. It's about 99.3%. And then uranium 235, which is the fissile isotope, and that's the one you focus on. And in natural uranium, it's about 0.7%. But in order to run that in a commercial light water reactor, like we have at least in the US and most of the Western world, I know Canada has a different approach, but we'll pass on that for now. You need to enrich that to between 3 and 5%, and it basically means that you need to change the concentration of the 235 isotope from 0.7% to 3 to 5%. And the way it's done today is you basically put it in a centrifuge and spin it really fast. And the concept is that whatever is heavier goes on the outside, and whatever is lighter goes on the inside. And obviously, there's only a 1% weight difference, so it's by no means an easy process. You just basically repeat it a million times and put a cascade of these centrifuges together, and you just keep repeating it until you do enough work until you have the enriched product that you can finally the concentration of 235 is high enough that you can put it into a reactor, a fuel rod, and then into the reactor. There's limited capacity of this around the world, but over the last few years, especially with the shutdown of a bunch of reactors in Japan after Fukushima, there's been a clear overcapacity of this. So because these cylinders, they just keep spinning, you can't shut them down. They're basically suspended on the electromagnetic sort of apparatus. So so there's no friction, and then you basically spin it several hundred rotations per minute. And once it's up and running and spinning, you don't want to stop it, because then you get metal on metal again, and you just don't want to have that happening. So you just keep running it. So what's been happening over the last 10 years, when you've had an oversupply of enrichment, is that because you don't have needs for the enrichment service itself, and you keep spinning these centrifuges, you do something that's called underfeeding. So if you're the enricher, the person with this facility, you get uranium delivered to you, the UF6 we talked about before, the converted product. You get that delivered to you from your end customer who's buying the enrichment from you. And then you have that delivered to your facility, you feed into your centrifuges, and then once you're done, you get the enriched product. And if you keep repeating this with the same amount of uranium you put in, there's no necessarily a natural stop to how much and 235 you can extract under this. Normally you stop at, you're going from 0.7, and then on the waste stream, or the depleted uranium, you call it, and maybe you run that down to 0.25 or 0.2. But it depends on the economics. How much do you pay per SMU? How cheap is the uranium? And if you have the overcapacity of enrichment, you just let it run. And you can run it down to, I think it was 0.15 maybe even. So what that happens then is that you get the amount of enriched material you need at the end, but you're left with a bunch of uranium. You basically have running as a uranium mine. So all this leftover uranium stays with the enrichers, and they can then in turn sell it into the market. And the portion of that over the last 10 years have been about 20 million pounds a year. So that's a Cigar Lake, it's a McArthur River, it's a combined, it's an enormous mine. And as things are very rapidly changing, with Russia having about 40% of the world's capacity of enrichment services, you can imagine that if that all falls away, now there is enough enrichment capacity in the West to cover the Western needs. But what's then going to be happening is that the underfeeding is obviously going to completely go away. That's already been committed, whatever enrichment is left. But if you're going to have further enrichment needs, you can certainly create that enrichment by just starting to feed even more uranium in. But what then happens is that rather than ending up with a bunch of spare uranium, the enrichers themselves, they need to go out and source that uranium. So now you've gone from being a source of uranium to a sink on the system. And the swing, it was just discussed in a conference in Montreal over the last couple of days. And the number that was presented from an industry expert is up to 50 million pounds a year, the swing. So you go from supplying 20 to being basically a demand for 30, more up to 30 million pounds. So it's an enormous swing, and that's clearly going to need to be priced in as we go forward.
So why don't let's just take a step back and look at conversion, and why don't you just tell us what the price of that has done in the past 6 months or in the past year, just so we have a better understanding of what's happening in that market.
Absolutely. It was about in the mid-teens about a year ago. So I was hovering around 15, 16, maybe up to 20. What happened was that ConverDyn, just like Cameco did with their mines, ConverDyn shut down their facility and purchased conversion in the market instead, because the market was so soft, it simply did not support running the operations. It was down towards $4, $5, $6, $7. And once that happened, it ran it up to slightly above 20, but then it started drifting down again. And Orano, with their facility in France, they were ramping up. So it felt like, yeah, price is going to stabilize in the mid-teens and even come down a little bit. And on Tuesday, we had a bid at $31. So you're looking at, and this is very rapidly, and it's purely a function of the situation in Ukraine, that fear of sanctions, thinking that it might be a shortage of enrichment, which in turns mean that enrichers are going to have to buy uranium and conversion. And conversion is the key. Uranium you can always find. I mean, it's just a matter of paying the right price for it. But considering ConverDyn is shut down, France is slowly ramping up, Cameco is already running Port Hope at full capacity, or close to anyway, then there might be a limit into how much conversion you can find. There are inventories, absolutely, that can be out, but clearly the price is $30 a kilogram now. They have a different unit on that, but it's doubled in less than a year.
And is that $30 a kilogram? Is that an all-time high?
It's the highest I've seen, and I've been in the market for 20 years, but I haven't heard of anything being close to that. So to my knowledge, it's an all-time high, yes.
And you already touched on enrichment and pricing there, but once again, just give us an overview of what's happened there in the past year.
Yeah, that's I think it was in about a year ago, maybe in the 40s, and the whole decarbonization, electrification, transportation, that whole net zero story, which is a very, very good story for nuclear energy, it started creating demand, not only in uranium with Sprott, of course, but even on conversion and certainly enrichment itself. People start realizing that, yeah, there's going to be a need for this. So that started creeping up from mid 40s, slowly up to low 50s. And then Russia happened. And then right now, if you're going to buy enrichment a couple of years from now, you're looking at $150 a SWU, which is the unit there. So spot prices might be a little lower, but that's we were trying to buy it and we just can't find it. So there's a little opaqueness. There's not really a liquid traded market. Even if you were going out and try to find spot enrichment today, it's impossible almost. And say it's going to take 4 or 5 years at least to build and expand enrichment capacity and build new facilities. So once that is down, then maybe I think the long-term price is around $130 a SWU. So that's what people are looking at further out. But there is a squeeze in the middle where we're seeing prices up to $150 a SWU.
So if I'm understanding you correctly, right now the utilities, the end buyers of all these products, they're more focused on conversion and enrichment and less focused on the actual raw material at this time. That's why we got significantly higher prices in conversion and also enrichment, and I guess you could say languishing prices in uranium.
That's absolutely correct. And it's also the natural order in which you procure this stuff, because you first buy the fuel fabrication, which is technically very complicated. There's not that much money in it compared to what you pay for enrichment and uranium, for example. But it's the most time consuming, and it's very exact, and it's very technically complicated. So that takes some time, and you do that first, and then you work your way backwards and finding out how much enrichment do I need, how much conversion do I need, and in the end, how much uranium do I need? So it's also the natural flow of things.
So if you were to guess, I know you're not clairvoyant, but when are we going to see a lift in uranium prices?
I would say, I think it's already coming back in the 50s, and I don't know if it's going to take the summer or not, but by the end of the year, I'd be very surprised if the number doesn't start with a 6 or 7 or something higher too. But that's pure speculation. But just seeing the need that is waiting out there, and by no means saying that they have to be there, but just knowing that as a utility, what's happening with the electricity prices. Sure, uranium might have doubled in 12 months, but the electricity prices have far more than doubled, and your fuel costs as a utility is maybe 10-15% of your operating expense. So you can absorb a lot more than a doubling in uranium price with a doubling or a tripling of electricity price. So I am not concerned that there will be demand destruction based on uranium prices. And at least the general sentiment from being on the conference for the last few days is that there won't be a shortage of material either. It'll just be a very significantly different price.
So I want to move the discussion now toward a timeline. And if you're the lead on a fuel team for a nuclear reactor, what kind of timeline are you looking at for acquiring all these components of the fuel cycle?
Yeah, the uranium, normally you buy it, you look a few years out in time because you have already a pipeline of contracts delivering there. So very few of them are exposed to uranium needs within the next year, certainly. So you're probably looking a little further out, I'd say a lot of 24, 25, 26, 27. And that was also made very clear from suppliers that even if you're as a utility, this is exactly what I want, and I want this much flexibility so I can decide how much I want to take, and there's my wish list, and I expect to get everything. While that has been the case over the last 10 years, it's very rapidly changing into a seller's market where the sellers have made very clear that just because you might want to buy uranium or conversion enrichment in these exact years, we may want to commit to longer term prices. Because I heard the head of the commercial teams from Cameco and Converdyne and Urenco, all three saying that we are not putting money into any kind of expansions or mine restarts until we have the long-term contracting to support that. And I felt like it was pretty directly addressed to utilities.
And how much inventory would a typical utility have on hand? Let's just once again use Constellation as an example, given that they have the largest fleet in the US. How much inventory would they carry?
I'm not familiar with Constellation, but I used to work for Swedish and a Swiss utility, so I know what the European situation is. And there you might sit on a reload at the time, at least at the site, or fabricated and ready. And then you have the other components. You could have it as enriched uranium product, and you can have it as UF6 and UK08. So you have a sort of pipeline constantly moving. But as at least a regular US or European utility, normally at least one reload on site and another year or so worth in the pipeline at any given time. So that's also what I like to, when it's with the energy security is such a topical issue right now. And especially if you have a gas power station, you sit in Germany or Finland or wherever you are, and Putin decides to shut off the gas, well, you got to shut down your power station the same hour, more or less, because you have no fuel for it and you don't really store that much on site. Now, if you have a nuclear power station, first of all, you only refuel it once every 12 or 18 months. So even if there's an immediate halt to deliveries, you won't notice it right away. And in a lot of cases, you do have a bunch of fuel elements on site ready to be loaded as well. So some of these utilities, they'd be fine. Even if everything was shut off today, 3 years, they'd be just fine. I'm not saying it's the case for everybody, but I am saying that a nuclear power station is very, very different in terms of security of supply for fuel than a fossil fuel power station.
So I want to bring all of these elements together now and get your sense of what's happening and how utilities are thinking. You were just at the World Nuclear Fuel Market Conference in Montreal, speaking with maybe a few investors, but mostly utilities. And what's your sense when it comes to the spot market? Do they really care if there's financial players involved soaking up all this excess supply, given that they don't really focus on the spot market? Are they more concerned about the term market and what's happening with Russia?
I would say in the beginning of Sprott's entry to the market last fall, when we also didn't have the Russian situation, it was clearly a hesitation, and it's more looking at, what is this thing that has come into our market, and it's clearly rattling cages and turning everything upside down, and everybody wanted to talk to us and ask what we're doing, and we noticed, some were not only positive. I would say that has changed, partially because there are bigger fish to fry right now. There are bigger, more important things going on. But it's also a lot of utilities. And I think there's not only to be nice to us when we meet with them one-on-one, but also they do see that it was clear they're not sustainable prices before. When you're at $25, $30, nothing is being put into exploration. I seriously doubt that Cameco would have made a decision to restart Cigar Lake or MacArthur if the prices wouldn't have been in the 50 spot prices wouldn't have been in the $50 range. Now, not necessarily, and they'd be the first one to say, we don't necessarily look at the spot market, but in turn, that has also affected the term markets, because there is the connection between the prices, of course. So it clearly has helped, and utilities recognize that the increase in spot price for uranium has enabled some juniors and larger miners to stay in business, to make more long-term decisions. So it's not going to be that crazy spike we saw in 2007 and then come crashing right back down. It's going to be more of a gradual phased-in approach, and I think everybody thinks that's a good thing. So from that perspective, it actually has a bit more of a balancing effect in the market. So it's not as negative when it comes to is the financial entry into the spot market a bad thing. And we're also saying that every chance we get is that it's not just dollars coming into and buying uranium. There are also dollars coming into uranium miners, so they can expand their production capacity, and they can have, the juniors can make more exploration, they can start to think more longer term. We have investors who ask us, yeah, this is a great story. We're loaded up on Sprott, we're loaded up on Cameco. I want to get into utilities. Who should I go to? And then it was like, well, there's one very good play in the U.S. right now, and that's Constellation, because it's a pure play on nuclear. And I think their share price, at least last time I checked a month or so ago, was up about 50% since the inception or the split of that company. So it definitely has a good effect on the market in general with the entrance of it. I think it's good for everybody. As the utility, when you look at the security of supply and what's happened, the development in Russia, that's clearly a cause for concern. There was a utility from my home country in Montreal, Sweden, and I think Vattenfall, if people didn't know about it before, a lot of people have heard that name and they're asking, what is this thing? And it's basically a state-owned large Swedish utility. And they went out the day after Russia went into Ukraine, and they said, we're suspending all deliveries of Russian material. And I don't know if they canceled the contracts yet, but it's certainly probably going to happen. So they went out the next day, and clearly they need to replace their material, and they have been busy, and they are busy. They were there, and they're talking to everybody, and they are very proactive in this. And I would have surprised maybe not more utilities followed suit on that, but it also, of course, depends on your exposure to Russian deliveries and other situations. Another company that was there was Fortum. It's a Finnish operator who has a Russian design reactor, 2 units, Russian design, not far from the Russian border. And they have what's called the life of plant supply of fuel. So the Russian would supply all the fuel elements to that facility for the complete lifetime of the power station. They just filed for a 20-year life extension. And they were obviously going to be relying on Russian fuel, but now Finland's applying to go to NATO. There's all sorts of situations going on in Europe. They're clearly not going to be reliant on Russian fuel anymore. So they are signing contracts as we speak to replace that. So there is a lot of things going on, and a lot of utilities are clearly planning for it. I would say almost every utility, even if they're not openly are doing it, they are active in one way and planning for it in one way or another.
Yeah, and I think that's what makes this market so fascinating is also the geopolitical aspects of it. So I have to ask you about this announcement that came out of the DOE or the Biden administration. It hasn't really been confirmed. We haven't seen a lot of details, but they want to spend $4.3 billion on domestic enriched uranium, I believe was the headline. Can you just put that into perspective?
The announcement came in the middle of the conference, and in the morning, and I was in a bunch of meetings. I was listening to speeches and presentations, and I didn't hear anything about it until it hit the Bloomberg screen and the market exploded, more or less. So it's I think I mean, of course it's a positive news for the industry, but I don't think anyone in the industry itself thinks that the uranium or that the U.S. government is going to come in and soak up all the uranium enrichment conversion they can find. First of all, it's not going to help, and second of all, even the numbers that they have there, it doesn't translate to astronomical amounts of uranium anyway. It's basically 2 million pounds a year maybe, and then you have the equivalent amount of conversion and enrichment to that. But yeah, there's a lot of ifs and buts around this. Nothing has been decided. But the positive thing, I think, is that it's a sign from the U.S. government that they are taking this seriously, and it could, of course, also be that a signal that yeah, some things is coming down the pike, and we're not completely ignoring you.
Pierre, as we wrap up, you've been involved in many aspects of the uranium business for over many years. Have you ever seen a time like this one that we're in right now where the path forward points to a significantly higher uranium price?
I have not. I mean, I started in the last run-up, and we said it was like a nuclear renaissance, and it was a lot of hype around it. And I did not train in the nuclear field. That's not where I started, but I was drawn to it because there's a really good there's a good case here from climate mitigation and even from an economic perspective, and clearly now decarbonization, electrification of the transport sector, all of it, it's been a very good case for a long time, and it continues to be an even better case. But of course, the air went out of the last one because the price run up was a little too fast, and you had Fukushima happen, a financial crisis. This time around, it feels like it's a lot more supported. So you're getting long-term goals and targets from governments. It's actually being enacted into active policies as well. And I would say that the industry itself is also much more mature to be able to handle this. So it's an extremely good bullish investment case in my view. The Russian situation, Ukrainian situation, it's definitely fuel on the fire. It might not be that long-lived, or we don't really there's a lot of uncertainty around it. But even without that, just the decarbonization and the electrification of the transport sector, that case alone, we're obviously very much looking at a WMC because of our activities in the battery materials, and I mean every single light is green. It's all systems go, and it's just I think also it's the right thing to do, but it's also a very good investment case. So it's a very, very exciting time to be in this field.
Well, Pierre, I want to thank you very much for spending time with us today and telling us about WMC Energy, and also telling us about the various components of the nuclear fuel cycle. Once again, thank you.
Thank you very much, Jimmy. It's always a pleasure.